This is the June 13 edition of Commodity Week.
Todd Gleason's services are made available to WILL by University of Illinois Extension.
Welcome to Commodity Week. I am Todd Gleason. Our panelists for the day include Dave Chatterton. He's at Strategic Farm Marketing here in Champaign, Illinois. We're joined also by Curt Kimmel at agmarket.net out of Normal, Illinois. And from the University of Illinois, agricultural economist Joe Janzen now joins us. Commodity Week, of course, is a production of Illinois Public Media. It's public radio for the farming world. Find us online. Listen to us on demand anytime you'd like at willag.org, willag.org. And there you'll find other information updated from the ag economist at the U of I, along with the crop scientists and the animal scientist. And you can, of course, just click and play from our website as well, or hit the subscribe button on any of the podcasts, including Commodity Week, the Closing Market Report, and the Illinois Nutrient Loss Reduction Strategy podcast. Let's begin with this question. Curt Kimmel, what should we talk about in this week of June?
Well, basically, we went from fundamental outlook to weather outlook. It's all in the hands of the weather guys right now. It's got the estimates out, particularly new crop. What's going to move that bottom line on the ending stocks is what type of yield you put on the crop now. So that's front and center. It's going to be an exciting weekend as we come back in Sunday night and Monday morning and see what the forecast shows.
Come in on Monday morning, and then midweek we get a pause, another holiday. This is one of those odd months of the year now, or a month and 10 days, Memorial Day, Juneteenth, which is on Wednesday the 19th, and then, of course, the July 4th weekend, all have the potential to be interesting pauses in the marketplace. When you're looking at the larger grandscape of what's taken place so far, looking back, what's top of your mind for both the corn and the soybean?
Yeah, very important time of year for corn right now, Todd. We got past the June report, as Curt mentioned. Not any big surprises in there. Most of the changes on the foreign balance sheet. So now it comes down to weather and yield and where we're going to go. And on cue, we have a ridge setting up on the western part of the Corn Belt. We're going to get these ring of fire rains in part of the Northwest, that Iowa, Minnesota, Wisconsin border area, but very dry and very hot for a big part of the Central Belt, and the guessing game on yield is going to begin. So from a timing standpoint, I think in that bigger picture that you're talking about, when we look at the long-term, seasonal price action in corn, if we look at a 5-year seasonal average, a 10-year, a 15, a 20, once we move past, let's say, the middle of June, June 20th, odds really start to turn against you as a producer to keep a corn market rally going. And so we've got weather in play. We've got funds that are short here to the tune of, we'll call it maybe 200,000 contracts plus or minus. We have a recipe to get what could be a quick, violent rally. And I think the message would be ready for that, have a plan, and be ready to take advantage of it. Because at the end of the day, I think we're still playing defense on our overall marketing tone for corn and beans both.
And then, Joe Janzen, I want you to look back just a day or two to the World Agricultural Supply and Demand Estimate, the numbers that were just released by the United States Department of Agriculture, the updates actually that came as well on Thursday morning from CONAB, and how they figure into what USDA's numbers look like, and the differences there, and give me the supply and demand fundamental outlook from your perspective.
As Dave said, we didn't really see a lot of movement on the U.S. balance sheet. There was a slight adjustment to the global balance sheet, particularly Brazil soybeans, where we saw them adjust to the fact that we are seeing these crop losses in Rio Grande do Sul in the far south of Brazil due to flooding. Those numbers, that information got incorporated into the balance sheet now. As we go forward, I think that's, again, that world balance sheet story ends, and it's all about U.S. weather and what the yield number is going to be here in the U.S. We really haven't seen that new crop balance sheet change at all. We typically don't until we get to the July report, and we're going to get there soon enough.
And then, of course, the CONAB numbers came out, and they adjusted as well. Interestingly enough, Curt, they adjusted, I think, about 1/3 metric tons down for the soybeans. That's something like 12 million bushels. and they adjusted with the USDA, the corn crop up in Brazil, in this case for CONAB, by 100 million bushels. That's not a small number. That crop will be in harvest now and through the summertime. How much of a difference does it make as it starts to come into the export market? related to what happens here in the United States and with the futures market? Is there very much hedge pressure, for instance, that might come out of South America?
It could be, but the biggest thing in South America is what type of political atmosphere structure, tax structure. There's a lot of moving parts going on there, and how if farmer's going to hang on and sell when he needs money. But yeah, that those are going to be available stocks, not as popular as the bean side of the equation there. And on the bean side, as they mentioned, we priced in the crop. I think what's more of a concern on the Brazilian bean crop is quality issues. We've seen China come forward here and just buy 106, 120,000 tons every day. And this late in the marketing year for old crop, I think there's a little concern or urgency. The quality might not be there. Not to play down the commercial side, but I think this quality, those poor quality being blended in or being crushed as meal and quality there. So there's some issues to work out here. And I think the key, though, is a little pickup in old crop. We just need to see them come forward and buy 1, 2, 3 million metric tons of new crop here fairly quickly.
Have they done any new crop yet for the coming year?
No, they've been flying under the radar on that. Don't be surprised, though. I think a year ago or two back, they came in when they did buy, it was huge all at once. So it's not going to be real bullish because they need to do a lot to play catch up to where they need to be.
Just as a reminder, we record Commodity Week Thursday afternoons at 4 o'clock. So now let's deal with old crop corn and sales that producers still have to make. I know they have it in the bin, probably at home. And right now, they've finally gotten to that point where they're hearing from the meteorologist across the board, hey, it's going to be hot. They have a disagreement, really, about whether it's going to be dry, but clearly going to be hot. And you mentioned that they need to be ready. When do they need to be ready, or how do they need to be ready?
I think your short-term window is 2 to 4 weeks here that you need to be paying attention. Of course, if you've got anything in commercial storage, that's going to roll over here again at the end of the month. But I'll give you an example. I talked to a producer today, won't name any names, but local Central Illinois guy. Oh, I've got 12 or 14,000 at the elevator I've got to get taken care of here by the end of the month. And oh, by the way, I have 60,000 in my bin at home. $450,000 worth of corn, $500,000 worth of corn, that's sitting out there. So it is time to be paying attention. And I think in a couple of different ways. One is that we have gotten that board rally now. We're off the highs by, let's say, 20 cents here, more or less, in terms of cash and futures, but still within reach of that. And we have a weather pattern that may be favorable to pushing back up towards that. As I mentioned, the funds are short. We've also had basis appreciation here as farmers have been busy with a late planted crop and replant and hoeing and spraying and side dressing. All of a sudden, we're seeing these cash bids start to creep higher on a basis, level. So even if you've got the time to haul grain, you can set a basis contract right now. Now, if you do that against the July, you don't have a lot of time to price that. But if you do that and roll that immediately to the September for 3 cents, maybe 4 cents, you have until, you can extend your window here, and you've got a place to take grain and deliver it and get it off the farm, get the quality concerns down. You still have to price the board side of that at some point. You don't want to go to sleep on that. But, I think the key would be if you do something like that, have a target in place, have an offer working that says, hey, if we get back to, whatever those highs are, 97 in new crop corn and, 86, 87 in old crop, let's get this stuff moved.
I think farmers are in a unique position here at this time where they have a whole lot more corn left from the old crop than they have probably maybe in their lifetimes, I would think. And they're behind the 8 ball. They may very well need the market. At University of Minnesota, we'll say, thou shalt not carry old crop corn into the month of July. I want to know if you agree with that. And then how do you manage the fundamentals based on what's happening in the basis market, right? Because at this point, basis is saying, if you're in Northwestern, time to giddy up, and it's paying up a little bit for it.
I think that's right. I mean, it's just the disappointment in not getting, say, to that $5 number is probably pretty real for a lot of producers. But the fact is that time is drawing pretty short. I think on the sort of thinking about something that would put some spark into the old crop market, namely, concerns about the crop conditions for new crop, that we're not really seeing it yet. And I don't think you want to wait all summer to get there. What I'm seeing really is particularly for that new crop marketing year, the sort of collapse in implied volatility, like our sort of projections about what that new crop price is going to be are narrowing pretty quickly here relative to what they've done in the last few years. And it just kind of creates this real sense of urgency for the producer to price old crop grain and have a plan for new crop.
Let me follow up on that. Is that based on the calculations and the calculators based on the FarmDoc website and what it can show you?
Yeah, so we have a price distribution tool on the FarmDoc website. I encourage everyone to go check it out at farmdoc.ILLINOIS.edu. But just shows what's the option market saying about the potential range of prices for a particular futures month, and we've seen that kind of narrow up a fair bit in the last few months, say for new crop corn compared to what we've seen in the last few years.
What does economic theory tell you about why that happens?
I think we're really seeing that, we've got this crop in, we've got, pretty reasonably favorable weather conditions. We're not in a drought in much of the Corn Belt as of right now. And so that's altogether favorable to new crop production.
Well, a year ago, we had much worse looking conditions and we had a lot of concern. Corn from mid-May for a month rallied $1.30. And in 7 trading days later, it was back down to what it gained. And all of a sudden, we're bullish again. We're up 80 cents, and then we're back down 80 cents. So, this market, what giveth it taketh. So, as mentioned before here, we got to keep an eye on things. On the corn side of the equation, I've seen a little bit of fear in these commercial guys. They're having to chase the market now. Decatur was paying up as much as 25 over. Out west, they're 50 over. Until the producer gets a rain, he's probably a tight holder here short term. So maybe take advantage of some of this basis opportunity. Something we're looking at to give you some short-term protection or short-term comfort. As we mentioned, maybe 2 to 3 week window in here is these August options. Those are good till the end of July. They're kind of economically fairly priced right now. So if you sell your cash grain, want to capture something up, or if you want to put a floor under you and sell your cash grain higher if we get a rally, there's some tremendous opportunity there to hedge your bet.
This is because the short term, and are you thinking short dated options as well or not?
There's August. It's based off the September futures for old crop. I know September's new crop, but that gives you some time. Then there are short dated, which is based off the new crop futures, December corn and November beans. And they're about every month there. They're cheaper, but they're a shorter period of time. They just give you a little bit of window, particularly getting through the July crop report. Once we get through the July crop report, we've removed the unknown, and they kind of deteriorate real fast if they're not moving in your favor.
Okay, so we've kind of dealt with of old crop. Now, coming back to new crop, most of you, I think, have been sellers of new crop quite some time ago. But there will be many producers, like with their old crop, have not made enough sales or any sales at this point. What should they do?
We need to get some offers in here. Look, every year can be different. This could be the 19, this could be the drought of all droughts. We don't know, but at this particular point, we're in a much better soil moisture profile than we've been the last 3 or 4 years. We've got a week of hot and dry weather coming up. We'll see what happens, but that's only going to take us so far. And, we can argue the USDA yield and what the carryout will be at the end of the day, but let's say we even start talking that new crop carryout below 2 billion. That's not necessarily supportive of $5 plus corn. Our previous high in D's corn, 497 in futures. We're at 476 or 77 as we sit here today. Getting beyond that and getting the funds incentivized to cover those shorts and go along the market for any sustained period of time, I think is a pretty tall order. So it doesn't necessarily mean you have to hit the panic button, Todd, but I think, again, the message has been, we're in that prime time. You have to be ready. And if you don't have anything sold, I guess I'm not going to feel too sorry for you. You've had opportunities and you know the situation, but if you're 20% sold, don't be afraid to get to 20, to 25, to 30, to 35, to 40 and work your way into it. So I think it's a situation where let's take advantage of what the market will give us here on any kind of a summer rally, knowing that I guess I'll say all else equal, barring a disaster, we would highly suspect, I think the odds are pretty high that we'll have lower prices for new crop corn in the fall than what we have today.
I've got something that's a little heavier for you, Joe, and I'm not sure that you'll be prepared to take this up at this point. As we watch wheat in the United States become the storage area for the planet, and then soybeans in the United States become secondary on the export market to Brazil, and now corn in the United States becoming sometimes secondary. What difference does that movement make to the internal price of corn, soybeans, and wheat, and the volatility within the marketplace? And I guess I'm asking, does it mean that you have less volatility in the basis market and more in the futures market? And how do producers need to think about not being number one on the marketplace?
I mean, I think a little bit of that is just ego bruise more than a change in really the supply and demand fundamentals of the global market for these commodities. I think really, I mean, I think maybe the fact that these markets are becoming more global kind of takes out some of the seasonality. We've seen that in the bean market. Maybe we'll see more of that in the corn market going forward. It's a little bit different in corn because the harvest period in South America is, closer to our harvest period than say for beans. So a little bit of is that sort of like a little less sort of seasonal certainty than maybe we had in the past. I think that's one of the changes. I think basis is still going to do what basis does, which is really sort of, try and pull grain out of the farmer's hands in a particular time, in particular geographies. And that function isn't really going to change so much.
So let's switch to soybeans. There has been talk that end users cannot find them, cannot buy them at this point. However, we have an inordinately large, well, not inordinately large, but a very large carryover for old crop soybeans. What's happening in that marketplace?
I mean, I'd say a growing carryout, not sort of, we're not, I think, in a large burdensome carryout here in the US yet. I mean, we just have to think back maybe 5 years, think about 2018, 19, think about what, a really big US soybean carryout looks like. So I think the other thing is that we know that there's a bean crop coming and the market can kind of flex across those two crop years to some degree. So there's enough beans out there in the world to not really put a ton of pressure on market prices at this point.
One last question before we move back to everybody else. When you look out at the marketplace, do you have more hope for soybeans staying steady where they are on new crop prices, or corn staying steady where it is on new crop prices?
I mean, I definitely on corn, I feel like we're kind of narrowing in on a price here in the mid fours for the time being. I don't see obviously the weather will do what it will do, and we don't, we could get a big weather-based rally. Something could really happen. But absent that, I think the market is really narrowing in on a corn price in a pretty narrow range here, especially narrow relative to what we've seen in the last 3 years. We have to be kind of okay with that, for whether that's a producer marketing grain or anyone else along the supply chain.
And soybean?
On soybeans, I think there's room for a little bit more volatility just because U.S. carryout isn't quite as big. I think there's still a bit of uncertainty about soybean acres, and we'll see what happens on the end of the month, the acreage report.
Speaking of that, we have that acreage report on the 28th of June. What do you believe will be the movement by producers for corn and soybean acreage that they have planted?
Boy, that's a tough one. It's all over the board. I mean, there was some switching. Talking to the guys up in the Dakotas, actually, they're giving it till this weekend. Some are giving it till the first day of summer for some reason, just trying to get the crop in. But there's ideas, maybe 400,000 acres up North Dakota prevent plant. It's a moving target. I think you could shuffle it around, 500,000, 1 million acres, but the bottom line is what type of yield you put on it now.
I think at the end of the day, there's not enough acreage movement here to really move the needle a whole lot in terms of the overall direction or momentum of prices. So we've got a situation where the trade is expecting, let's say, 1 million more corn acres, and some of that, let's say, 3/4 of that less in the beans. I'm not so sure that the numbers don't come out pretty flat. We did have some acres that switched. We had some prevent plant. It's just one of those years, and we'll work our way through that. But I don't think it's driving the bus. And to go back to Joe's point, I mean, the corn versus the beans, I think there's a fundamental difference here with the bean market. Part of that is it's got a little bit more of a cushy carryout than corn. Part of that is the export market. So in corn, where you have very good domestic demand with ethanol and feed, and good demand with exports, thank you, Mexico. I think Mexican exports are like 40% up year over year, and they've really filled a hole that China has not. That hasn't happened in beans, and there is a big hole there where China has not stepped in, at least yet, and particularly on new crop. So until you solve that problem, I don't think you have the money flow investor sentiment that wants to chase beans. So to me, I think we're in a situation where beans can go as high as corn, or feed grains, let's say, can drag them at this particular point. And I spent some time trying to get a producer a little excited about corn and maybe this upside here in this next window, but beans are the one that maybe you should really be worried about.
How worried? I mean, worried I make more sales to what?
Well, I think you have to pull that trigger quicker. It's not that we don't have some upside. If corn rallies, wheat goes with it, certainly we're going to see some reaction in soybeans. But if you sniff $12 again in new crop beans in terms of futures, I think you need to be paying. You need to click your safety off and be ready to go.
So that would be pushing cash. Are you talking about sniffing $12 futures?
Yeah.
Oh, well.
Well, the high in November to date, or the high for November, is 12.31 in this recent rally. I think we got to 12.24 or 5 a few weeks ago. So we have a very limited shelf life, at least from the pricing that we've had to this point, above that $12 range. So again, have an offer working, give yourself some time to get there. The seasonals on beans give you a little bit more time. They take you out into the end of July versus corn at the end of June. So you've got a little window there, but be pretty diligent about how you're approaching that, I think, in terms of your risk and what you're going to need to move in the fall in particular.
Pricing models are pricing models, but I've seen some models project corn this fall down to $3.50 and beans down to $9. So there is some risk if this crop comes through. But one other thing too, and Dave kind of hit Mexico. As we look at the drought monitor, we only see the United States. That you draw a line right along that Mexican border. It's dark red, and Mexico's been a buyer, and they're going to continue to be a buyer for our demand outlook.
Absolutely, there's downside when I say volatility. I mean, I think that's right. We could grow soybean carryout here pretty significantly without too much happening. We see a few more acres come into production. We see good yields. So I think Dave's absolutely right. Like there's some downside there, and we need to be thinking about that.
Right. So wheat lettuce for a while, it has dropped off a cliff. Is that just a normal drought and or freeze function, and or can wheat make another run?
Well, we don't want wheat to lead right now since it's on the down, for heaven's sakes. But I think the cart got ahead of the horse here a little bit. We saw a lot of fundamental catalysts, particularly with Russia and Ukraine and so forth. We'll see how things unfold. The biggest thing on wheat is wheat harvest taking place. And that's just going to keep a lid on things here short term. The only thing is I've talked to some guys in the Ohio River Valley. They had a lot of rain through there in Kentucky and so forth. Those yields aren't quite as good as they thought. Test weight's only 54 pounds. They're cutting it, trying to dry it, 80 bushel best. But you go a little further north out of that wet zone, they're talking 130 bushel for the soft red winter wheat. So there's a lot of wheat market in front of us.
And as you mentioned on Monday, there's harvest pressure in this marketplace.
I think that's the biggest change. I mean, rule number one of commodity trading or marketing is some commodities are more volatile than others, and wheat stacks up near the high end of that list. So wheat is going to do it's going to do, but it's going to do it in a volatile fashion in most cases. And we've seen, a lot of empirical evidence of that here of late. But I think the biggest change is just the focus of the marketplace, and that is we've stopped focusing on Black Sea and the cuts to the Russian crop and what may happen with Russian and Ukrainian exports. And we've started to focus on what's happened in the U.S., which has been good May rainfall and improvement in the crop outlook, very good early harvest results from the hard red wheat crop, a little bit more questionable in the soft, but it's just to me, it's just a harvest function. And the money in the market and the view in the market and the sentiment and the attention of the market is shifting to row crops at this particular point. because we're getting into our summer, reproductive phase for those crops.
I'm going to put each of you on the spot just a little bit. Given normal growing conditions, the rest of the growing season, fundamentals not changing on the world marketplace in any substantial way, when does the market low for corn and soybeans come, relatively speaking? And can the market rally very much after fall? And I guess, Joe, I think I'll start with you.
Go back to seasonals. I mean, I think you'll bid some of the whatever weather risk premium exists in the corn and soybean market right now. We'll bid that out. I don't know if that number is a really, really big number right now, but it's typically there. And so you'd have to expect a lower price coming into the fall, into that October, November timeframe. And then, we've got reasonably good carries, particularly in the corn, 25-ish cents out to July of carry out in the corn market. And so that seasonal pattern will play out.
I think it's going to come down to August. I think producers are going to unload, empty the bins for the new crop storage space, and at least that's what the commercials are hoping here. And we can have a flush out when you get that phone call, do you want to pay another in charge or not? So that's the risk of seeing that flush out there as guys give up. The biggest question, it is election year. There's a lot of political ups and downs, and China's a wild card. So I think there's just a lot of moving parts, but I would expect a pre-harvest low or early harvest low.
We've talked a lot about, specific fundamental things and factors in the grain market. And let's not forget there are things working outside of our markets that really affect money flow in and out of these grains. And so the geopolitical side, the election side, the economic side with the Fed and rate cuts and all that's going on. So, the prediction business is a tough one, but I would suspect with just what the other two panelists have indicated, and that we're going to probably follow a pretty typical seasonal pattern. We're going to get down, we're going to make those lows probably right before or in the early stages of harvest. But then the question becomes, what is the upside potential from that point forward? And we're transitioning into a Brazilian, season, and South American season, I should say, and what's going to happen, all the things that we normally do. So to me, it's a bigger risk than what it has been the last 4 to 5 years, being, underpriced or having less forward priced for your new crop this year than it has been in those previous years. And I know farmers like their storage, and certainly we can take advantage of that. That doesn't mean you can't sell forward and take advantage of carrying the market. But I think I think you're putting more risk into your operation by having yourself undersold this fall than you have been in the previous 3, 4, or 5 years.
Let's work towards a final word now from each of you. We'll start with you, Curt Kimmel from agmarket.net.
Interest is high all of a sudden. This exciting time of the year is going to present a lot of opportunities. I think the bottom line is you look at your operation. I kind of look at the spring price, the insurance guarantee in the spring there, and try to improve that. Try to raise that floor if there's an opportunity.
Joe Janzen from the University of Illinois.
I think we see sort of the things are coalescing pretty quickly here. And so, there is a strong impetus to start thinking about, both getting old crop marketing done and really thinking about new crop.
And Dave Chatterton from Strategic Farm Marketing.
I'll pick up exactly where Joe left off. I think you have less time than you think. And I know, it's a busy time of year. We've had a late crop. We're trying to play catch up on the agronomy side, but you need to pay attention to some of your marketing and at least get some offers into place. If not, be starting to move some grain here. And, it's going to be an interesting year. It's always an interesting year. We don't know what's going to happen, but, the odds are, what we can do is look at the historical odds and play those. So we've talked about the seasonals and when we think the lows will be and those different things. And, the market is aware of that. And, in most cases we'll beat you to it. So, stay on your game.
Commodity Week, of course, is a production of Illinois Public Media. You may listen to the whole of the program anytime you'd like. You can do that at willag.org, willag.org. Our thanks go to our panelists, including Joe Janzen, Curt Kimmel, and Dave Chatterton. I'm University of Illinois Extension's Todd Gleason.